If you lodge a tax return in Australia, listen closely, Amazor Foist, because the ATO probably already knows the number you're about to write down. Forget to declare just $1,000 of bank interest, and you can be automatically flagged years later, hit with penalties of up to 75% on top of the tax you owe, ATO penalty regime. Why? Because your bank reports that interest straight to the ATO every single year. This affects almost every working Australian, anyone with a bank account, an employer, an investment, or a side hustle. The ATO now runs over 600 million third-party transactions through more than 60 active data matching programs, PABI's Accounting 2026. But you're not powerless. There are 3 moves: reconcile your pre-fill, match your platform turnover, and pull your capital gains footprint. Here's the number that should stop you cold. 600 million plus financial transactions ingested every year, ATO. Cross-checked through over 60 data matching programs, PAB's Accounting 2026. But here's the part nobody tells you. The ATO isn't just collecting this data. It's effectively reconstructing large parts of your return before you've even logged in to lodge it. 3 moves to stay ahead of the match. 1. Reconcile your ATO pre-fill. 2. Match your side hustle turnover. 3. Pull your multi-year capital gains. Each takes under 20 minutes and they're all free. So how does the ATO rebuild your return? Through compulsory feeds from at least 14 categories of source. Your banks report interest income and big international transfers. Your employer reports salary, allowances and bonuses every pay cycle through single-touch payroll. Services Australia reports Centrelink and other payments. Share registries report dividends and trades back to 1985. Add managed funds, super funds and PEXA property settlements. All matched to your TFN ATO Tax Tank 2026. Now here's what happens when your return doesn't line up. The system flags a discrepancy automatically. If the ATO considers the omission careless, it can impose a 25% penalty on the shortfall. Reckless behaviour rises to 50%, and for intentional disregard, up to 75% of the tax avoided. On top of the tax itself, ATO penalty regime, and the general interest charge compounds daily on top of that. But the second problem is sneakier. The ATO isn't just hunting for missing lines anymore, it's hunting for patterns that don't make sense. Declare a modest income but hold multiple high-value insurance policies? Flagged. Your Stripe and PayPal sales far exceed the business income you declared? Flagged. Cash-only rent that undercuts what your agent reports? Flagged. And border movement records can be checked against your travel claims. Tax Tank 2026. And the cost of staying in the grey zone compounds. Underreport just $5,000 a year for 5 years, and the ATO can reconstruct $25,000 of undisclosed income. Tax Tank 2026. At a 32.5% marginal rate, that's about $8,125 in tax, ATO. Assessed as reckless, a 50% penalty adds roughly $4,000 more, over $12,000 total, before daily interest. Here's the belief that gets people in trouble. The myth. My side income is too small for the ATO to bother with. People assume it only sees their salary and whatever they choose to disclose. The fact, eBay, Shopify, PayPal, Stripe, Square and Tyro already report your gross sales straight to the ATO. Nanak Accountants 2026. The fix is simple. Match your declared income to your platform totals. Put it together and the numbers are brutal. Underreport $5,000 a year for 5 years and you're looking at $25,000 of hidden income. Tax Tank 2026, about $12,000 in tax and reckless penalties combined. ATO, and here's the kicker. Once you're flagged, every older year inside the amendment period gets revisited too. Meet Tony. He's 37, an IT contractor on an ABN with a side gig flipping electronics on eBay. He grosses $145,000 a year, $115,000 from contracting, about $30,000 net from online sales. He's GST registered, has crypto on 2 exchanges, and assumes the ATO only sees his PAYG income and whatever he decides to disclose. Discovery 1. $75,000. That's the gross sales as payment and e-commerce platforms reported to the ATO last year. Nanak Accountants 2026. Tony only declared $40,000, figuring the rest was just flipping personal items. That $35,000 gap at 32.5% is $11,375 in extra tax. And if it's reckless, a 50% penalty pushes it past $17,000 ATO. Discovery 2. His crypto history goes back over 10 years. The ATO's Crypto Asset Data Matching Program holds transaction records from Australian exchanges all the way to the 2014-15 financial year, Tax Tank 2026. Tony thought his trading was private. If he's averaged just $2,000 of net undeclared gains a year for 5 years, that's $10,000 the ATO can identify. Roughly $3,250 in extra tax, plus penalties and interest. Discovery 3, the most damaging. Tony declares $80,000 to $90,000 in taxable income, yet he just bought a $1.1 million investment property and holds high-value income protection cover. Every settlement generates a PEXA record sent to the ATO, Tax Tank 2026. His agent reports $40,000 in rent, he declared $25,000. That $15,000 gap is nearly $5,000 in tax, and if seen as intentional, over $8,500 all in. Add it all up. Across his e-commerce, crypto and rental gaps, Tony's model bill is about $52,800, roughly $42,000 in back tax and $10,500 in 25% penalties before any interest, ATO, Tax Tank 2026. And if any of it's judged reckless or intentional, with penalties climbing towards 75%, the total can blow past $70,000 or $80,000. So could this be you? 3 signs. 1. You've never actually downloaded your ATO pre-fill report before lodging. 2. You don't know your total platform turnover for the year. And 3. You haven't tracked your crypto or share disposals across multiple years. If any of those ring true, the next 3 moves are exactly what you need. 3 moves. Let's do them. And they're all free. Move 1. Download and reconcile your pre-fill before you lodge. Go to MyGov, into ATO Online Services, then Income Tax, and open the pre-fill report. It shows exactly what the ATO already holds against your TFN, bank interest, employer income, dividends, government payments, private health. This is general information, not personal advice. But here's the part nobody tells you. You adjust your figures to match theirs, not the other way around. Here's how. Log into MyGov and link the ATO service if you haven't. Open your latest year and hit Pre-fill My Return. Then compare every amount against your own records and adjust your figures to match. What good looks like? Your income items equal or exceed every pre-filled amount with any difference documented. Move 2. Cross-check your business and side hustle turnover against what the platforms report. Export your gross sales from every platform you use: eBay, Shopify, PayPal, Stripe, Square, Tyro. These dashboards mirror the exact merchant data the ATO receives, Nanak Accountants 2026, so your declared income has to reconcile against them. How to do it. Export full year gross sales from each platform. Add them up in your accounting software or a spreadsheet, then compare that total to the business income you reported, and document any genuine personal item exclusions with evidence. What good looks like. Declared income at least as high as total platform sales with a material gap of 0. Move 3. Pull your multi-year capital gains footprint, shares and crypto. Download annual transaction and dividend summaries from each broker or share registry, and full trade history from each crypto exchange. The ATO's data goes back to 1985 for shares and 2014-15 for domestic crypto, Tax Tank 2026. So a clean multi-year picture is your protection. Here's how. Export at least 5 years of trades from your brokers and exchanges. Calculate gains and losses by year in tax software, matching disposals to acquisitions. Then compare to what you actually reported. And if there are gaps, get advice on voluntary disclosure first. What good looks like. Reported gains match registry and exchange data with no missing disposals. And why does this matter right now? Because the net keeps tightening. In 2022, Single Touch Payroll Phase 2 began pre-filling detailed salary, allowances and bonuses every pay cycle. By 2024, crypto exchange records were being matched back to 2014 or 15. And from 2026, the OECD's Crypto Asset Reporting Framework, CARF, goes live with offshore crypto and foreign account data flowing back to the ATO, Tax Tank 2026. The window for guessing is closing. Once you've acted, verify it. You should see your return match every pre-filled income line. Confirm your declared sales are at least your platform totals. And if you uncovered old gaps, ask a registered tax agent about a voluntary disclosure. Doing it before the ATO finds it usually means lower penalties. Everything here is drawn from the ATO and Specialist Accounting Analysis. All the sources are linked below so you can check them yourself. So now you know how the ATO matches 600 million records to your return, and the 3 moves that protect you. Next week, the legal way to disclose old crypto gains before the data match finds them. If this helped, subscribe. We read the fine print so you don't get caught out. See you next week.